Only 7 years ago, that was only 5%. So they've doubled in that time, which shows an extraordinary rate of change in how shopping habits for us, the British public, have changed.
And briefly, if you would, please, Fraser, we've got 3 bank holidays coming up over the next month, including the coronation. Is that going to be supportive for the supermarkets?
Yeah, I think it will be supportive, but I think a lot depends on the weather, actually. Sunny bank holiday weekends do drive extra purchasing because people open the barbecues, people have a party. If they're a bit of a damp squib, I think it's going to be less good. Coronation, probably not going to be as big as the Jubilee celebrations, which, of course, are double bank holiday on the same weekend. And also, you know, are we going to be going out and buying the coronation quiche ingredients? I think it's not necessarily as popular as you might think. Only half of households bought a quiche last year, so perhaps it's not for everybody.
All right, Fraser, good to talk to you this morning. Thank you. Now, the cost of flour has been rising even more than groceries in general, with flour inflation at around 30%, according to the Office for National Statistics. Well, that has meant difficult times for bakeries such as GAIL's. Well, joining me now is the Chief Executive and co-founder of GAIL's Bakery, Tom Molnar. Tom, welcome to you. What's been happening in the main to your costs over the last 12 months?
Well, the costs have gone up substantially over the last couple of months. They're sitting at kind of 20-year highs for flour, so it's been a challenging time for input costs.
And flour, is that the highest of the input costs, or is it things like energy and wages as well?
Well, for us, it's quite a lot of butter, actually. But yeah, so flour, butter, energy, fresh fruit and veg, everything. Normally, you'll have something spike, some supply-demand imbalance, and you kind of work through that. This kind of came, everything all at once. So it was challenging year for costs.
What about energy in particular? To what extent were you able to hedge your exposure there?
Well, we actually did quite a good job during the middle of COVID. We booked quite a multi-year contract at a fixed price. So, so we ended up in pretty good position. But we still have some growth, and we didn't know how much we would grow. So a lot of it was bought on the spot market, and it was, at one point, it was 9 times higher than what we had bought on a contract.
And what about your ability to pass on higher costs to consumers? You're a premium product anyway, so customers, I guess, are used to paying a little more. Has that affected greatly demand?
Actually, we've been quite busy, and I think it's, I've listened to your speaker before. The headline rate is 17% for grocery. We're under 9% inflation. Our cost increases over the last year. We've worked really hard at kind of figuring out how we can contain those costs. I think, so we haven't had as big of a cost increase, and we still see good demand. I think people are still looking for something that's interesting in life and to enjoy part of that. So hopefully that premium end, especially of food, where you care about the nutrition that you take in and the quality and the source of your ingredients, that those things are important and stay important despite some rising costs.
Now, Fraser, the previous guest, was reluctant to say we'd seen the peak in food price inflation. What do you think?
I think we probably a little bit more to go, but then it's over. So I'm pretty optimistic that we're sitting, like I said, on a number of commodities at 10 to 20-year highs, and I would say that without a big geopolitical issue, that we'll see things getting better and easier for all of us, and so inflation will come down.
Well, amen to that. You've recently launched a digital loyalty app for customers. How's that been going?
It's been fantastic, actually. It's taken us a while to put together. We weren't sure, how we had a paper version. We wanted to make it more digital, people, just to make it simpler. Well, yeah, it's been great. We've had, I guess, 5% of people have come into GAIL's are using it now, which I think is great after 2 weeks. The team did an amazing job of putting it together, making it simple and effective. You can also do click and collect. So, instead of standing in the line, you can get in there and say, okay, today I'm in a rush. I want to get in there. Let me order ahead so that I can get to my train, and just more predictability. And if you got time, maybe you peruse the baking table, which is, fresh and beautiful. Or at least we try to make it that way every day.
And what about your expansion plans? You've just started opening stores in the northwest of England. Do you plan to go further afield?
Well, I mean, step by step, right? We've had a bakery serving top chefs up in Manchester for 6-7 years now. We have a great team of bakers. And so, Manchester's, really a vibrant, innovative place. So it's been Manchester now. Well, we have two, but we've been up there 6-7 years. And yeah, we're enjoying it. It's great. It's like a new neighborhood, new set of friends, I suppose.
All right, Tom, got to leave it there. Appreciate you joining me today. Thank you.
Pleasure.
Some other business news stories for you now. And up to 2,300 jobs are at risk after the online grocery retailer Ocado announced plans to close its oldest distribution centre at Hatfield in Hertfordshire. Ocado said the move reflected the shift it's been making towards running more automated warehouses using robots. Well, Hatfield currently accounts for around a fifth of Ocado's weekly customer orders. The company's now begun consultations with workers and said it aims to offer jobs to as many of those affected as possible at nearby sites such as Luton. The owner of Premier Inn has returned to the black following a sharp rebound in travel and tourism. Whitbread reported a pre-tax profit on an adjusted basis of £413 million for the year to the 2nd of March. That compared with a loss of £16 million in the same period a year ago. It's also 15% ahead of the same period in the pre-pandemic era. Well, Dominic Paul, the company's new chief executive, hailed a strong performance from Premier Inn in the UK, but said it was also making good progress in Germany. Well, shares of Whitbread, which also owns pub restaurant brands such as Beefeater and Brewers Fayre, are currently up by 5.25%. And the owner of Primark warned this morning that it was expecting to see a sales slowdown there in the second half of the year. Sales growth slowdown, that is. Associated British Foods said that it remained cautious about the resilience of consumer spending in the face of ongoing inflation and the higher interest rates, although it expects to see the benefits of lower sea freight costs, which had returned to normal levels, along with much reduced energy costs. Well, the news came as ABF, which also owns grocery brands such as Twinings, Ryvita and Jordan's Cereals, reported an adjusted operating profit of £684 million for the 24 years to the 4th of March, and that was down 3% on the same period a year ago. UBS has reported a halving of quarterly profits after having to set aside more money to cover potential bad loans. Well, Switzerland's biggest lender, which has just rescued its domestic rival Credit Suisse, reported a net profit of $1.03 billion for the first 3 months of the year. That was down 52% on the same months a year ago. Well, that followed the lender having to set aside a further $665 million to cover potential costs related to its involvement in the sale of US residential mortgage-backed securities in the run-up to the global financial crisis. Well, Sergio Amotti, the new chief executive, described the results as solid. Now, the train ticketing app Seatfrog has raised £6 million in its latest funding round, backed by a syndicate of blue-chip investors. Seatfrog was founded in 2018 with the aim of filling some of the millions of empty first-class seats on trains each year and claims to have saved passengers more than £43 million to date. Well, joining me now is the chief executive and co-founder, Ian Griffin. Ian, welcome to you. I mean, with this money, you're looking, as I understand it, to step up expansion across Europe. Which are the markets you're targeting?
Yeah, so our first market internationally is Italy. That's 500 million passengers. And I think what we're seeing is demand across Europe because really, if you look at it, over 50% of passengers are unhappy with trains. So Seatfrog is here to end those long-standing frustrations, but help rail companies run more profitable networks full of happier passengers.
Do people buy tickets much differently on continental Europe? I mean, obviously, a lot of us buy in advance now on digital apps, whereas some people still buy them at paper tickets at the station.
Yeah, it is changing drastically. I'd say with paper tickets, that's in huge decline. I think COVID drove a lot of that. A lot of people are shifting online, which is obviously a huge growth area for businesses like Seatfrog.
You've got a quite interesting anecdote about how the business was founded. Tell me about it.
Yeah, that's right. Dirk and I are over 12 foot tall between us. And I think in those early days, we were wanting to fill some of those 570 million seats that travel empty every year. And that's where the business came from originally. But we're much more than that now. You know, we really want people to know there is a much better alternative. And Seatfrog is the place where you can book your ticket for a great price, upgrade to first class for a deal, or change trains in 2 taps on the day, which is a huge problem, especially in UK rail.
Why is it that so many first-class seats do go unfilled on trains? Is it because they're just so eye-wateringly expensive and people are just put off by it?
I think there's a little bit of that in terms of affordability, but also capacity is really very hard to manage in rail. You think about the billions of passengers that are moving from A to B every day and how last-minute plans change all the time. I think train operators have a huge task ahead of them to manage capacity effectively. And that's really what we're helping them do in a much smarter way.
In terms of your current business, are you doing more in terms of short-haul commuter journeys into and out of cities like London, or is it the intercity stuff that really drives business for you?
Well, now that we sell tickets as well, we're seeing a huge amount of growth across the board. I think in our early days, we were obviously a lot more focused on a long-distance commuter journey where first class is more attractive. But now that you can buy, switch and upgrade all in one app, we're seeing a lot more growth across the board, really, in all sorts of different lengths.
Now, rail travel has still not returned to pre-pandemic levels. It's about 75% of it, I think, now. Is there anything that the government should be doing to try and move the needle on that, given that it's about to wrest control of the entire network, more or less?
Yeah, I think if you look at leisure travel, that's back past pre-pandemic numbers. Business travel, not so much. I think rail has a huge opportunity ahead of it to spearhead the targets of 2030 carbon emissions goals, much more sustainable modes of transport. I think for us, it's about delivering an experience for passengers that they deserve and expect, which really hasn't been done for the last few decades. It's stagnated, hamstrung by legacy technology that really doesn't make it a great experience to catch a train. And so we're really looking to change all of that.
NASA mentioned the government's about to set up Great British Railways, which is going to run the infrastructure, set timetables, sell tickets. It also wants to have a ticketing app.
Yeah.
Is that a big competitive threat to you?
I don't think so. I think if you look at the market that we've been almost in a quasi single monopoly for a few decades now. And I think competition, I don't want to sound like a right-wing economist here, but competition applied in the right way is a good thing for passengers because ultimately the customer is what matters here.
Yeah, absolutely, Ian. Good to see you this morning. Thank you.
Thank you.
Well, still to come here on Ian King Live, we're going to have a look at how the markets are doing this Tuesday morning. Don't go away.
We're starting up, now we're on our way, leaving all our yesterdays behind. Something special that we want to say.
I don't think that people really know, especially the youngsters nowadays, know enough about British black music. Henceforth, that's why of many of the projects I'm involved with, I decided to collate Flashback together. We've got over 100 artists, over maybe 800-900 hours of material.
So tell me more about that.
Well, it's taken quite a while. It's taken years. I mean, I've been doing some other documentaries. I've done 3. First was children in Zambia, Tunisia, South Africa, in between doing Flashback. And I just recently did a short on St. Lucia, which is where my parents are from. And in between that, working on Flashback. So we're still collaborating with people. We still have about 75% of it completed, but it starts from the turn of the century, classical music coming from the origins of Africa into Europe, because classical music was the pop of the time, coming into the 20s, the 30s, the 40s, obviously the 50s, people coming from the Caribbean, from Africa, from Asia, the 60s, where you had multicultural bands, developing like Clem Curtis and the Foundations, the Equals, into the 70s, where it was more Afrocentric with Osabisa and groups like that. And my kind of time where you had all the DJs coming in, pirate radio stations, things like that. The 80s, of course, was vast, a fusion of so many different types of a kaleidoscope of music from all over, where I came from in North London in particular. And the 90s, you saw the whole influence of genre, turning in from drum and bass into hip-hop, all that kind of style. So Flashback crosses a lot of that.
Well, the Nikkei in Tokyo hit an 8-month high overnight amid a strong set of company earnings in corporate Japan, but it was one of the few bright spots overnight in the Asia-Pacific region as the main Shanghai index fell for an 8th straight session. Mumbai, which isn't on the screen, was also slightly higher. Well, in Europe, stocks have also traded largely to the downside so far this morning. All the main continental European indices in negative territory right now. Talking points this morning include Nestlé. The shares are ahead by 1.5% in Zurich after quarterly earnings beat forecasts. But the Spanish banking giant Santander is off some 3% lower in Madrid right now. That's after profit takers moved in after its latest results. It has had quite a strong run of late. Here in London, the FTSE 100 also in negative territory, currently 0.25% lower and a broad-based sell-off. In terms of the features this morning, well, I mentioned earlier on the leading gainer, Whitbread. Look at that. The share's up 5.5% on its results. To the downside, Associated British Foods is off some 5% on its results, while Centrica, that's the owner of British Gas, of course, nearly 3% off right now. Apparently, there's a major shareholder offloading some stock this morning, so that's why that is lower. Centrica off 3%. As I say, Whitbread, the leading blue chip gainer right now. Outside the FTSE 100, WAG Payment Solutions, it's ahead by some 3% right now on a trading update. On the downside, Travis Perkins has updated the market this morning. It's off just over 2.5% on what it's had to say this morning, while Jupiter Fund Management, that is off another 1% right now after it reported yet more quarterly net outflows. On the foreign exchange markets, well, the euro has been trading to the upside this morning following some hawkish comments overnight from European Central Bank officials, although it's actually the dollar that sterling is lower against right now. It's off 0.1% against the greenback. It's more or less unchanged against the euro. Similarly, the single currency more or less unchanged against the dollar. As for the oil price, well, that rallied last night on optimism over Chinese travel fueling demand, but it's failed to hold on to those gains. A barrel of Brent crude is currently changing hands at $82.63 a barrel. That is off just over 1/10%. Well, joining me this morning is Russ Mould. He's investment director at AJ Bell, of course. Russ, good to see you.
Morning, Ian.
We've got to start with Whitbread. I mean, knockout numbers from them, really.
Yeah, really strong numbers. Dividend up, £300 million buyback. And I think probably most intriguingly, the outlook statement was pretty strong. They're talking about not only accommodation now being above pre-pandemic levels, but food and beverage as well. And that was running below last year. So that's in the UK, very, very strong. And the German business, still in loss, still early stages, but progressing very nicely, and aggressive room opening plans continue.
Yeah, I mean, one thing that struck me looking at their results, there was nary a mention of their pub restaurant businesses. I mean, completely shoved to one side.
I mean, Premier Inn is doing incredibly well. I forget, is it Harvest? You want to see what the other brands that they've got in there, I think? Beefeater, that's right. Fair, yes. Got to get that right, yes. So, but yeah, they didn't really get a mention. But I think food and beverage has been a bit of a weak point for them. That now does seem to be picking up a little bit. They've still got input cost inflation of 7 to 8% to deal with. Wages, food and things, but they seem confident they can offset that with increased rooms and some cost efficiencies themselves. And at the moment, their prices are going up. Revenue per room is really pretty strong in the UK at nearly £75.
Yeah, pretty good. Harvester, it's owned by Mitchells and Butlers.
Thank you so much for saving my bacon.
Don't write in.
No, thank you.
Mitchells and Butlers, although the chief executive never comes on the programme, which annoys me no end. He's very camera shy, but there you go. What about Associated British Foods?
Bit more of a mixed bag. I mean, the Primark margin was actually better than people were expecting at 8.3%, but the profits were still down. The food business is performing pretty strongly. Most of those sections were up. Sugar was quite strong despite some dodgy crops in one or two places. But I think what's frightened people a little bit with their shares, because I think they're the worst performer in the index this morning, just caution on the consumer, caution on input costs, and they don't want to be seeming to be pushing Primark prices too far. So I think there's going to be no expansion in the Primark margin in the second half of the year, and that's just made people step back. And again, like a lot of these retail and consumer exposed stocks, they've had a brilliant run since October. Government steps in to help people with their spending, give a little bit of confidence and support there. Again, it's just, I think the situation probably isn't quite as clear as everybody would have liked it to have been.
It's a pretty good company on the whole, isn't it, ABF?
Terrifically well run, yeah, absolutely.
Now, what about these banks? I mean, we've heard today from UBS, we've heard from Santander, and obviously we hear from some of the UK lenders later this week.
Yeah, the UBS shares are down. I think the real reason they're down, although UBS postponed rather than cancelled its share buyback as it begins to grapple with bringing Credit Suisse on board, is what happened in the US overnight with First Republic Bank. It announced it lost 40% of its deposits in the first quarter of the year. That's $72 billion. So the US, yeah. So the US, and that's despite JP Morgan and some of the bigs put $30 billion. But I don't think that the American public was too confident. So I think that means that people got worried that we're still not through this shakedown in the US regional banking system. That could have knock-on effects upon the world's largest economy if the banks don't have as much capital on the balance sheet. They can't lend as much, and the chief loan officers probably won't let them do so even if they wanted to. So that's what's probably knocked sentiment on the European banks. UBS, there was an increase in the loan provisions as well, so that's something that we've been looking for. But all of the big five in the UK, they've all said they expect loan losses to, quote, start to normalise this year from the very low levels we've seen. Interest rates have been rock bottom for, 15 years? It's very inevitable as rates go up, you will start to see some increase in loan impairments, and we'll see what Standard Chartered have got to say tomorrow, which kicks off the UK banking season, then Barclays Thursday, NatWest Friday, and HSBC and Lloyds next week.
Yeah, I wonder whether we'll hear from CS Venkat, the Barclays CEO, because he has been receiving cancer treatment, but I noticed he was at the PM's Business Forum yesterday.
Oh, that's interesting. He has been, I know he's been on social media and he has put some statements out, so it would be fantastic if he was there, clearly for his personal health reasons above all else. That's the most important thing.
Yeah, we wait and see on that one. Russ, good to see you this morning. Thank you. Well, still to come here on Ian King Live, a big jump in music royalties as the industry recovers from the pandemic. Don't go away. Welcome back. Well, if you were watching yesterday, you'll know it's City Week, in which more than 1,000 leaders from the financial services sector have been getting together to discuss and tackle some of the pressing issues with which it's grappling. One organisation at the centre of the push to support digitalisation and sustainable investment is the European Bank for Reconstruction and Development. That's the lender that was founded at the end of the Cold War to build open market economies and promote private enterprise in former communist countries. Well, joining me now is the bank's president, Odile Renaud-Basso. Very good to see you this morning. How much have you invested over the last 12 months, roughly?
13 billion euros.
Right.
And more than half of it in the green sector.
Very good. Sorry, you could go on.
Positive investment for the environment.
And which countries have taken the lion's share of that?
I mean, in all countries, we are doing green investment. And overall, I mean, the biggest countries in which we invest, Ukraine was Turkey, but also countries like Uzbekistan, Egypt. These are among the biggest borrowers for the bank. And we work mainly with the private sector.
Very interesting that you've spread your net further than people may associate the EBRD with doing so. I mean, we kind of think of you as investing in the Czech Republic, Poland, countries like that.
But progressively we've extended our mandate to Turkey and then to northern Mediterranean countries and Middle East. So we always were in Central Asia, but we extended on the Mediterranean, Middle East and Turkey, which already are important countries for us.
Now, you've come hot foot to us from Ukraine, where you saw President Zelensky at the weekend. Just outline for me how much you're supporting Ukraine right now.
So Ukraine is one of the, last year we invested 1.7 billion in Ukraine and brought in financing from the banking sector of 200 million on top of that. So it's a very important country of operation for us. And we have stepped up our investment in the context of the war.
Now, you say you work with the private sector in partnership with financial institutions. What sort of support are they giving?
So the bank, for example, we work with the bank in Ukraine, and they lend money to SMEs, and either liquidity support or for investment, capex investment in SMEs, and we share the risk with them. So we cover part of the risk they are taking. That's a way to incentivize them to lend to small businesses. That's one example. Otherwise, we are working, for example, with private equity fund, investing in the private equity fund that will then invest in Ukraine.
Now, it's worth pointing out, this is your second visit to Kyiv since the war began. You went in October last year, I think it was. Have you noticed much of a change on the ground?
Yes, very big change, because last year, when I was there in October, it was just after the start of the shelling by the Russians. The week after, they just bombed a garden for the children in the city and the road in the city. So it was and the winter was coming at that point of time, so there was a huge uncertainty about the capacity, the resilience of the country to go with the winter, with shutdown of electricity, issues of heating and so forth. Now, in spring, the situation is completely different, because they went through the winter, managed to keep things going despite the challenges, and so the city is much more lively, much more people, traffic jams, and life back as normal.
Well, that's good to hear. It's not exaggerating to say, though, you did help keep the trains running and help keep the lights on during the winter.
No, exactly, because we finance the railway company, and we provide a huge amount of financing for the electricity network company to help them, whether they were bombed regularly. The infrastructure were really destroyed, to build them again very quickly. So we had a huge partnership with them to do that.
And what about the repayment of those loans? Does Ukraine have more lenient terms than some other countries that borrow from you?
So we keep the same interest rate than before the crisis, so it's a big effort. We have got sovereign guarantees for that, and we also get some donor support from our shareholders in order to share the risk, because this is indeed a very risky situation. So in order for a bank like us to be able to continue, we need to have some guarantees, and we guarantee 50% of our activity there.
What sort of thinking can you do about post-war reconstruction, given that it feels as though Ukraine and Russia are at a stalemate situation right now? The Russians certainly aren't leaving anytime soon.
So it's even different scenarios may exist, and indeed there is a high degree of uncertainty of what the next month and the next year will be. I think we are ready to continue to support Ukraine, even if the war, in the reconstruction, when the situation is clearer and security is better, then I think we will need to step up investment to rebuild.
Very briefly, before I let you go, the King just opened your new headquarters in Canary Wharf. You're still very committed to London, obviously.
Absolutely. And it was a great event for the whole staff.
Very good to hear. President, good to see you this morning. Thank you.
Thank you very much.
Time now for a look at this morning's business pages, and the Financial Times leads its print edition with the Chancellor Jeremy Hunt's admission yesterday that British corporate taxes are too high, and that came at a meeting, of course, with business leaders where the Prime Minister Rishi Sunak also spoke. The FT also notes that Mr Sunak was berated by Jerry Murphy, the chairman of Burberry, for axing VAT shopping for overseas visitors. Well, the FT is currently leading its digital editions with news that the UK has announced evacuation flights from Sudan. Well, the Times leads its business pages with a story I reported on our lunchtime business bulletin yesterday, that the French luxury goods giant LVMH has become the first European company to achieve a stock market valuation of $500 million. The Times also reports that the Financial Conduct Authority has overhauled rules governing the use of cash deposit services at the post office amid reports and concerns that hundreds of millions of pounds worth of dirty money is being laundered by post office branches every year. Well, that story also makes the business front page of the Daily Telegraph, although the paper leads with comments yesterday from Brian McBride, the CBI president, that the lobbying organisation may be impossible to save after allegations of sexual misconduct. Well, joining me this morning is Anjli Raval. She's management editor at the Financial Times. Anjli, great to see you this morning. Let's start with the CBI, because I know you've been very assiduously reporting on this. Is it going to survive?
The thing is, it takes a really long time to regain trust, and that's not something that McBride or any of his colleagues can guarantee. At the moment, the members that we speak to are really, really concerned. They just don't know if the CBI is going to be able to turn this around. They've tried to, say that we're going to wait until June. We've got an extraordinary general meeting then, and that's when we're going to lay out all the different things we're going to do to get our shop in order. And it's really, really hard. And so I think McBride's right. It's not clear if they can survive.
What about the appointment of Ray Newton-Smith as the new Director General? I mean, there is a fair amount of people out there saying they should have gone for someone who was an outsider rather than someone who until recently had been there for quite a long time.
So from our reporting, some people are saying that actually she would be really great as a leader. She clearly understands the people around her. She's worked at the organisation, so that's obviously a positive. However, any management expert you speak to, anyone who you speak to around how to transform organisations, particularly those with a toxic work culture, they all say you need to remove an entire top tier of leadership and essentially try to create a new culture. And is she going to be able to do that, having had a senior role at the organisation before she left at the beginning of the year and now just come back?
Yeah, absolutely. Now, another story you've highlighted on this morning, the Times. Employers say hiring workers is a struggle despite layoffs.
Yeah, this is something that's really interesting because it's come through in my own reporting. Even towards the end of last year, where we could see that the market was taking a turn for the worse, people were still hiring, and they still said they wanted to hire, whether it be in construction, hospitality, and it's not just sort of skilled jobs where there's a big shortage. It's also so-called unskilled jobs too. Hospitality is a big one. Brexit's been a big issue. Lots of traditional sort of the base in which you'd employ from. A lot of people have gone out of the country now, and students, it's a really big one. A lot of them are preferring to take digital jobs as virtual assistants, those kinds of things, which are better paid and not as labour intensive.
Yeah. Did you work as a student?
I did, in retail. It was great.
Yeah, it was. I pulled pints, never did me any harm. And worked in an abattoir, which was less fun. You've also picked on a very, very interesting story in your own paper, the FT. Keir Starmer and Rachel Reeves have been talking to private equity chieftains.
This is really fascinating for me because, yes, on the one hand, you've got the Labour Party obviously trying to show that they're pro-business, yet at the same time, they're saying to these private equity individuals and firms, we'd love you to invest in our country, but at the same time, we're going to remove this big tax loophole that has, enriched all of you. And actually, these private equity executives seem to be okay with it. It was really, really interesting to me, particularly in the context of what happened last year, towards the end of last year with the mini budget and then the whole LDI crisis. I spoke to a private equity executive at the time who said, I really want the Labour Party to come in. Now, for the private equity industry, which is renowned for, cutting jobs, making companies more efficient, all of that, to say that they want the Labour Party in, it was a massive thing to say. And so I'm really interested to see how this plays out.
Yeah, how do you think it's going to go down with Labour's paymasters in the union movement?
I'm not entirely sure. One thing that is clear is that the Labour Party is courting business, and they're not they're not ashamed about that anymore. They can sort of see that they need to do this to win at the next election. But at the same time, courting private equity executives is a whole different kind of game. And I'm sure that union bosses are not going to be loving that.
Yeah, it's a fascinating story, isn't it? Anjli, it's lovely to see you this morning. We haven't had you on the programme for ages. Do come and see us again soon.
I'll do.
Cheers. Now, a reminder to you to check out the Ian King Live podcast, which you can find by scanning the QR code on your screen right now. It's available now wherever you get your podcasts, including the Sky News app, Apple and Google Podcasts, and Spotify. So if you want to get access to our podcast, scan that QR code right now. That will stay on the screen for you for just a couple more moments. Now, if you play music on your premises for either customers or staff, whether that's through radio, television, a CD or a download, it's considered a public performance. That also applies to live music performances and for TV and radio broadcasters. And for that, you need a music licence. Well, those licences are issued by PRS for Music, the home of the Performing Rights Society, which passes the money on in the form of royalties to members when their work is performed, broadcast, streamed, downloaded, reproduced, played in public, or used in film and television. Today, it announced that it collected an unprecedented £836.2 million worth of royalties in 2022. That was up 23.5% on 2021. Well, joining me now is Andrea Zapari-Martin, Chief Executive at PRS for Music. Andrea, good to see you this morning. This is presumably a bit of a bounce back from COVID and live performances returning.
Yes, it's part of it. However, if we look at our results, royalties paid out, the cash to our members has actually increased 19% versus the pre-pandemic in 2019. So it's more than just a return in live. So definitely return in live, 16% better than 2019, so exceeded it, but also very good in streaming.
So where are you seeing the strongest growth in terms of royalties collection?
It is on the streaming. So saw a 25% increase. It's the biggest royalties paid out coming from streaming, and also revenue exceeded £300 million. So that's one of the biggest growth. But every platform, I would say, has really grown.
So every form of royalty is now back to pre-pandemic levels?
Every form except internationally, slightly below, because we rely on the other societies.
That's really encouraging news.
It is fantastic.
I mean, some performers now stream their gigs to online audiences as well as performing live. What sort of money are they making from that?
Online live concerts. So they're doing it strong. We were very pioneering in licensing that, and we have increased quite a lot. On online, what we're seeing is the streaming online has increased by about 26%, and it's one of our biggest growth opportunities.
There's been a lot of grousing about the size of streaming revenues, the amount that the likes of Spotify pay out compared with traditional forms of revenue that a musician or a writer may receive. Is that starting to abate? What sort of feedback do you get on that?
Well, we have done really new licenses and better licenses for that for our members. And that's where our biggest growth. So 334 million came from that. It's the biggest platform. We also saw a huge increase on video on demand and also gaming.
Yeah, so video on demand. I mean, that's things like YouTube, of course.
Yeah, YouTube, Netflix, etc. Yeah.
And what about gaming revenues? What sort of? I presume that's sort of contemporary music rather than classical music.
Yes, definitely. It's definitely new type of music, but it has almost doubled for us as royalties paid out from video games, and it's a big focus for us for the years to come.
How are the gaming companies like to deal with? I mean, you've really had to sort of change what you do over the last decade, I guess. Because once upon a time, it was just radio and TV companies and all sorts.
I mean, that's really what we have done in the last 3 years when I came on, is to be brilliant at the basics and reinvent and find new solutions for old problems and continue on making sure that every platform that plays music are licensed. We did a record-breaking license with Twitch, probably one of the only ones. And so it's always making sure. We had 33 new licenses that we had to negotiate in 2022.
That's huge. It used to be called needle time, didn't it, in the old days?
Yeah, no, it's really fascinating, and there's more and more platforms, so we have to be in the forefront on that.
And is it possible to say roughly, I mean, it's a difficult question to put to you, I guess, but roughly what proportion of artists, composers, musicians out there are not claiming the royalties to which they're entitled just because they've been sloppy about registering with you?
Oh, that's a good question, Ian. We know that more and more members are becoming our members, especially we just launched for members that are under 25 a new joining fee to really have the emerging talent register, you know, and making sure they are paid. But out there, I have no idea in the world how many it is. But we have increased our membership a lot because we want to make sure that they're fairly paid.
And the message is sign up then if you're not.
Sign up, and especially now we've got a new fee, you know, £30 for under 25. And you'll be surprised the amount of money that we collect and that we pay out.
Excellent. Andrea, good to see you this morning.
Thank you.
Still to come here on Ian King Live, I'm going to be joined by the Chief Executive of Grosvenor Group as profits are hit by falling property valuations. Don't go away. Good to see you. Thank you.
We're starting up, now we're on our way, leaving all like yesterday's behind. Something special that we wanna say.
I don't think that people really know, especially the youngsters nowadays, know enough about British black music. Henceforth, that's why of many of the projects I'm involved with, I decided to collate Flashback together. We've got over 100 artists, over maybe 800-900 hours of material.
So tell me more about that.
Well, it's taken quite a while. It's taken years. I mean, I've been doing some other documentaries. I've done 3 for SOS Children in Zambia, Tunisia, South Africa, in between doing Flashback. And I just recently did a short on St. Lucia, which is where my parents are from. And in between that, working on Flashback. So we're still collaborating with people. We still have about 75% of it completed, but it starts from the turn of the century, classical music coming from the origins of Africa into Europe, because classical music was the pop of the time, coming into the 20s, the 30s, the 40s, obviously the 50s, people coming from the Caribbean, from Africa, from Asia, the 60s, where you had multicultural bands, you know, developing like Clem Curtis and the Foundations, the Equals, into the 70s where it was more Afrocentric with Osabisa and groups like that. And my kind of time where you had all the DJs coming in, you know, pirate radio stations, things like that. The 80s, of course, was vast, a fusion of so many different types of, a kaleidoscope of music from all over, where I came from in North London in particular. And the 90s, you saw the whole influence of genre turning in from drum and bass into hip-hop, all that kind of style. So Flashback crosses a lot of that.
Global insight, made local. Invest in your future. Sky News Financial Reports, sponsored by Interactive Investor. Invest in your future. Sky News Financial Reports, sponsored by Interactive Investor.
Welcome back. Now, Grosvenor, the investment company best known for its commercial property interests in London's Mayfair and Belgravia, said today it was looking to diversify its portfolio with more overseas assets. The company, which manages the interests of the Grosvenor family, headed by the Duke of Westminster, also set itself a target of reducing global direct and indirect carbon emissions in line with limiting global warming to 1.5 degrees Celsius. Well, the news came as Grosvenor reported a fall in full-year operating profits from £311.9 million to £46.2 million, which largely reflected declines in property valuations. Well, joining me now is Mark Preston. He's Chief Executive of Grosvenor. Mark, good to see you this morning. I mean, these are non-cash impairments, of course, we should stress.
Absolutely. Thank you for having me again, Ian. Yeah, that's right. I mean, most of the profit before tax is in the form of valuation movements. If you take those away and look at revenue profit, 52.5 million down from about 100. So that was still a reduction. But actually, pretty much in line with expectations. With interest rates going up, values coming down, difficulties in some of the commercial sectors of the market, actually those results we think are pretty reasonable. They're certainly relative to the market, pretty strong.
And of course, you're investing like fury, which we'll get onto in a moment. But what's been happening with property rents?
Well, I think talking about the office sector particularly, which is particularly interesting, we've got going on at the moment a number of things. First of all, there's of course the move to hybrid working, and demand for offices therefore is changing, both the use of offices themselves and also the overall volume. And what we're seeing is a polarisation now between the best offices and the rest. The best being those that are highly specified, energy efficient, environmentally sound, as well as having the sort of space that is appropriate for convening and the sorts of use that tenants are putting space to now. In those areas, we're finding strong demand. The most recent 3 office buildings in London, we've been able to pre-let 64% of those at rents ahead of what we were expecting. But then the rest, those that are not so environmentally efficient, that are less attractive, they really struggle to get occupiers. And that's where there's going to be, I think, quite a bit of fallout in the office sector.
And presumably you're going to have to spend more money making some of those businesses more attractive to tenants.
Correct. I mean, many of our buildings we've been retrofitting for some years now in anticipation of the need to make sure they were up to standard. But some will need further spending. And we've got a £90 million retrofit programme at the moment in London to bring those older buildings up to standard. And that's very much part and parcel of our overall commitment that you just referred to in your introduction to the Science-Based Target Initiative to achieve a reduction in carbon consistent with 1.5 degrees warming. And what's interesting about the commitment is not so much the targets, but actually the pathways that we're developing to enable us to be really clear about how we get to those reductions. So in the UK, we're the first European property company for the Science-Based Target Initiative to have actually verified the pathway. In other words, they're saying, yes, if you follow that pathway, you will achieve these reductions. And there are many businesses who've simply talked about a target without necessarily a pathway to get there. So that 90 million retrofit is one of the things that we're doing in the office.
So who verifies that pathway?
The Science-Based Target Initiative. It's an organisation that you essentially sign up to, and they come in and verify your pathway. So by the end of next year, all parts of Grosvenor will have had a pathway put in place. And at that point, we then need to do it. Obviously, we're beginning in some areas and have done for some years, whether it's reducing peat emissions from carbon emissions from peatland in our rural estates, or whether it's the 24% reduction in the UK property business over the last couple of years.
Yeah. Now, as I mentioned, you are looking to diversify the portfolio. What sort of assets and geographies are you interested in?
So yes, the property business is about 50% overseas and has been, as you know, Ian, has been diversified for many years. I think the results this year and the relatively mild declines in values in our portfolio is largely thanks to that diversification. So whereas perhaps some of the UK properties have been falling more in value, others, particularly logistics, the logistics sector has been increasing. So what we're doing in the overseas investment area is looking at everything from industrial, logistics, student housing in Brazil, medical offices in Australia, and the logistics are particularly in the US and Poland, for example. So we're looking at sectors that Grosvenor doesn't traditionally have its own exposure to through its own businesses, and other markets to give us broader diversification.
Well, it's got a mixed bag you're targeting there.
Well, it's very deliberately part of spreading our risk and getting access to the higher growth and more interesting sectors around the world. And logistics has been particularly successful for us.
Now, obviously, people best know you for your property assets, but you do have a big farm estates business, and also you're investing a lot in agricultural technology as well.
Correct. So alongside the property business, the food and ag tech business, which has been in existence now for about 10 years, we've got investments in 28 different companies. And essentially what we're trying to do there is to focus on food security and sustainability, so decarbonising the food supply system, and really trying to disrupt what is a very fragmented industry, the food industry. It's lacking in innovation, needs investment. And so we've made investments in everything from phosphate recovery from wastewater to plant-based alternative protein foods to low-carbon milk, a variety of different investments in the food and ag tech space. And then, as you rightly say, we've also got the rural estate activity where we're protecting and restoring sensitive habitats like the peatland that I described earlier on, and investing really to both focus on the communities and social aspects of those communities, and also the environmental and particularly carbon reduction.
Mark, there's loads more I wanted to ask you, but I'm afraid we're out of time. You just have to come again. Good
Thank
to
you,
see you
Ian.
this morning.
Thanks very
Thank you.
much. Bye.
That's it from me this morning. There's much more on the Sky News mobile app and on the website with reporting, video content and analysis from our business team. Run back tomorrow morning at 10 o'clock. Hope very much to see you then. In the meantime, do stay tuned because coming up after this short break, it's Jane Secker. Thanks for joining me today. Cheerio.